guys, and welcome back to The Property Hustle. Before I go any further, make sure you click the subscribe button below and click the bell icon as well so you can get notifications every time I post. So the Bank of England have finally done it. They have officially raised the base rate. Last week, the Bank of England announced that interest rates would be increased from 0.25 to 0.5. Now that might not sound like a lot, but it does have a knock-on effect on people that own property, because when the base rate rises, so does the interest rate on your mortgage repayments. So I recently bought my buy-to-let back in June. I was advised by my mortgage advisor to fix it. Fixing your repayment means that you get given a rate to pay it back, and that for those 2 years, that is the rate you're going to pay. You're going to pay the same amount every month. Now, if you can always choose a variable rate, that's when people want to kind of go with the way that the market's going. So if the base rate increases or decreases, your rate will do the same. Now, I believe most mortgages or most people choose to fix their mortgages because it just means that you know what's coming. You know, you can plan ahead. If you know you're going to have to pay a fixed amount each month for a certain amount of time, that gives you a bit more security. So a lot of people choose to fix their mortgages. So back in June, I chose to fix mine for 2 years because I was of the impression that interest rates weren't going to rise, or at least I didn't believe they would rise anytime soon. I knew they were going to because we were almost at an all-time low, but I did not expect them to raise them so darn quickly. Because now I'm sitting here like, I should have fixed it at 5 years, you know, because anyways, there's no point crying over spilt milk. Fortunately for me, my rent covers, the rent I get from the property covers the mortgage. In fact, NatWest, who are my mortgage providers, when they were assessing my mortgageability, they looked at the property and the amount of rent that could be received from the property. And for them, I believe it's something like the rent coming from the property has to be at least 4 times what your mortgage payments would be. It just gives them extra security, and it gives yourself as the property owner security that, okay, let's say interest rates do rise, there's a little bit of a buffer. So fortunately, I do have that buffer. When the news was released, I believe, was it last Thursday or Friday? Can't remember. News was released, there was a BBC article that suggested that the base rate was due to rise at least 2 times more in the next 2 years. So then I started freaking out a little bit. I was like, oh sugar, by the time my fixed mortgage comes to an end, I don't know where the rates are going to be. Then I started thinking, well, is there a way I can kind of, I don't know, maybe remortgage or maybe change the terms on my mortgage at the moment? So I emailed my broker immediately. I love him. His name's Richard. He always puts my mind at ease. This is why it's so good to have a good team of people around you who are experts in their field, because there's no way I could ever understand all the kind of ins and outs of mortgages and stuff. So he is literally my go-to man. So I emailed Richard and I said, I just wanted to know what my options going forward would be, i.e. could I refinance after say a year, June 2018, and try to lock in a 5-year fixed period in case of rates rising further, or should I ride out the 2-year fixed period, hoping rates don't increase too much, then reassess once the fixed period is up in June 2019? He responded, that is correct. You either break the current deal and you pay the early repayment charge. So when you fix for a certain period, if you want to break any time in that period, or in your mortgage term, you're gonna have to pay a charge. So you either break the current deal and pay the early repayment charge, thus allowing you to select a new fixed rate now, or wait until your current fixed rate expires and then refix. It's worth remembering that the point of taking a fixed rate in the first place is to protect against rises such as we saw yesterday. Unless rates were to rise more steeply than is predicted over the next 2 years, it would not be cost effective to break the current deal and incur the early repayment charges. So not only did he put my mind at ease, he basically advised that it's probably not cost effective because I'm gonna have to pay, I don't even know how much I'm gonna pay, but I'd assume it would be quite a hefty charge for breaking the term early. I might as well just ride it out and just hope to God. I mean, I don't imagine rates going, you know, super high. Like, you know, I doubt, at least I hope they won't like just put it at like 2% this time next year. I mean, I'm not politically savvy in that way. Like, I don't really know what the economists are doing, but I feel like they wouldn't jump it that high, especially with Brexit negotiations happening. It's 2 years of uncertainty. I would doubt that they'd want to hike up the rate that high, you know, in this period. So I'm literally sitting, crossing all my fingers and my toes that rates kind of stay relatively the same. I mean, the ideal situation would be that the rate stays at 0.5 right up until I finish my fixed period, and then I can remortgage, and then I'll most likely probably fix it for 5 years. But having said that, you know, the market might have changed substantially by the time I come to the end of my fixed period. So you know, it's all, if I'm honest with you, it's all guesswork, especially when you're invested in property or any other asset class really that is affected by macroeconomic changes. So yeah, I just thought I'd share that story because, you know, it's happening to me. I want you guys to know what's happening. Maybe it'll help some of you guys out there make a decision as to whether to lock in your mortgages now, later, whatever. I just wanted to share that with you guys. So it's not the end of the world. I think if you're a savvy property investor, you will have gotten an investment property that covers the mortgage so that you are kind of okay. If you own the home that you live in and you're worried about rates increasing, I would definitely advise having like a reserve, so money that you put aside each month to counteract unforeseen circumstances such as these. So just, I don't know how much you can afford, just put it some away in an account that you don't touch, and then in the event that interest rates do rise to a point that you are struggling, then you can dip into that fund. So yeah, that's my advice on interest rates, and well, I guess we're gonna have to see what happens. Unfortunately, that is it for this video. I hope you found it useful. If you did, give it a thumbs up, and don't forget to subscribe for new content every Sunday. Thank you so much for watching. See you next time. Bye.